Talk us through what sort of jumped out to you, and I guess a difficult environment that this group is facing when it comes to try and predict the market dynamics for this year.
Hi Heidi. So the cuts, which amount to about 2 million barrels of oil a day, were extended through to the end of June. Pretty much widely expected by the market. A couple of interesting points. First, the Saudis account for about half of that cut. They're under quite a lot of pressure, or self-imposed pressure, to keep the oil price high, given that they need a price of around, an average price of around $90 a year for this year to balance their budget. Fitch came out with that estimate a few weeks ago, and that's as they build futuristic cities, host sports tournaments, pay top footballers a lot of money. So yeah, they're going to have to sort of work quite hard to try and get the oil price up there to balance the budget. The other interesting point is that Russia, which has been given a special exemption, gets to, the exemption allows it to mix production cuts and export cuts with its quotas. And they've said they'll be focusing more on production cuts, which will allow them to keep exporting more to fund their war in Ukraine.
But we haven't exactly seen very good compliance from Russia and some other producers as well. So do you think that we're going to see better compliance moving forward? And how is that likely to play into broader oil markets, especially if we do see those cuts being extended perhaps even longer?
Well, compliance is always an issue. The smaller members have a history of not complying that well. I think the bigger issue for OPEC Plus is that we've got surging production from outside the cartel, from the Americas, particularly the US, but also Brazil and Guyana, and that's, although oil prices have been on a slow but sort of steady ascent this year, that extra production has really capped the gains. We've also still got a bit of a Middle East war premium in the price. Transport costs have gone up as tankers get diverted away from the Red Sea and the Suez Canal and have to go around Africa. So those are sort of pushing the price up a bit. The surging production from outside OPEC Plus is pushing it down, and also the demand outlook is not looking that great, particularly in China. So all those things mean that it's going to be tough for OPEC Plus to push up prices, and there's a trade-off here because as they keep reducing production and production from other places surges, they're going to lose market share. Well, they already are losing market share, but they're going to lose more market share. So I think that's going to come to more of a head at the next meeting in June, when they decide, what they're doing for the rest of the year. There's going to be pressure from particularly the smaller members who don't want to keep on cutting output, but at the same time you have the Saudis under this sort of self-imposed budgetary pressure.